In this class, we will explain the types of Chinese companies. There are so many types of business licenses in China. But which one is right for me? When we choose the type of enterprise, we must not only consider the scale and industry of the enterprise, but also combine it with our own development needs. For example, limited liability companies are suitable for startups and can reduce shareholder risk. However, a joint stock company is more suitable for mature enterprises and is more conducive to attracting investment. Then, individual industrial and commercial households are more suitable for individual entrepreneurs with simple procedures and favorable tax policies. Foreign invested enterprises enjoy policy support and greater autonomy in choosing to expand their business in the Chinese market. Only after weighing the pros and cons can we find the business model that best suits us. Different types of enterprises have their own advantages, disadvantages, and scope of application. So how do you make a wise choice among the wide variety of business types? Let's first distinguish by the number of shareholders. If we are a group of people starting a business together, we need some partners. What types can we choose at this time? Divided into companies and partnerships. If we are the only one starting a business, then we can choose from individual businesses, sole proprietorships, and limited liability companies. Below, we briefly introduce the differences between these types of enterprises. First, let's talk about limited liability companies. This type of companies is quite common in China. Most Chinese companies, open limited liability companies, are more scalable and more versatile. Even if the company grows in size and prepares to go public in the future, it can be upgraded to a joint stock company. But please note that a joint stock company generally upgrades when the company becomes larger and is about to go public. It is more suitable to register a limited liability company when the company is first established. Partnerships include general partnerships and limited partnerships. Partnerships are not applicable to ordinary companies, but only exist in some special industries. For example, law firms and auditing firms. There are also other situations where professionals in the industry are required to bear unlimited liability. Because of the particularity of the industry, both general partnerships and limited partnerships need to bear unlimited liability. There are general partners in limited partnership, and limited partners only need to bear limited liability. Therefore, a partnership has unlimited liability. In order to avoid liability, you only need to register a limited liability company. Therefore, under normal circumstances, you do not need to consider a partnership. Unless you want to build a company structure or use it to make some investment funds, then you can consider registering a partnership. In later courses, we will have a separate chapter that will discuss the uses of partnerships in detail. Now, let's talk about the three types of one-person entrepreneurship. Individuals can register three different types of businesses: individual business owners, sole proprietorships, and limited liability companies. Below, I will explain the differences between these three in detail. From the first dimension of responsibility, the three types of companies, namely individual businesses, sole proprietorships, and limited liability companies, need to bear different responsibilities. First of all, individual business owners need to bear unlimited liability. Unlimited liability sounds scary, but don't worry. It doesn't mean we have to bear unlimited responsibility. Unlimited liability means that when our individual business or sole proprietorship owes someone money, we first use the assets of the individual business or the enterprise to repay it. If you still can't pay back the debt with these, you will need to use your personal assets to repay it. Individual businesses and sole proprietorships are run by individuals only. So, when the business suffers losses, the individual operator needs to repay the losses. This is the normal unlimited liability system. So, a limited liability company should be run by multiple people, right? Not entirely. There are also companies run by individuals. If you are the only shareholder, it is called a one-person limited company. In a one-person limited company, if the shareholder cannot prove the distinction between the company's assets and personal assets, so the shareholder of a one-person limited company also needs to bear unlimited liability for the company's debts. Under Chinese law, when you are the only one running a company, you basically have unlimited liability company. it is best to find another shareholder to join. When there are 2 or more shareholders in a company, then limited liability can be assumed. When we use the registered capital as the limit and assume limited liability for the company's debts, it is called limited liability. For example, when a company is poorly managed and incurs a debt of 10 million RMB, then, in fact, only 1 million yuan of debt can be repaid. If the remaining 9 million yuan cannot be repaid, the company can apply for bankruptcy liquidation. This is called limited liability. His is based on your company's registered capital as the limit to assume limited liability. As I mentioned above, a one-person company may also have unlimited liability. So when you want to register a company, it is best to add an extra shareholder. However, this additional shareholder cannot be a couple, because if a couple serve as shareholders together, they may also bear unlimited liability. Because the couple's property is a family's common property, legally speaking, they can be considered as one person and are likely to bear unlimited liability. Therefore, as long as they are not couple, people of other relationships can become additional shareholders, such as parents, children, brothers and sisters, and other relatives. Right, so those are the stuff to note about corporate liability. Next, I will explain this from the perspective of scalability. I have summarized 3 subdimensions on this point. First of all, from the perspective of the number of shareholders, a self-employed business can have and can only have 1 shareholder. And the number of people cannot be increased, and they cannot even be called shareholders but can only be called individual operators. Unlike a sole proprietorship, a limited liability company can add shareholders. The maximum number of shareholders can be increased to 50. So what should we do when the number of shareholders of our company exceeds 50? In this way, we can upgrade to a joint stock company, and there is no limit on the number of shareholders of a joint stock company. Then, I will talk about chain stores. First of all, individual business owners cannot open directly operated chain stores. If you want to open a franchise store, you can do so under the name of an individual business owner. However, individual business owners cannot open direct operated chain stores, but you can open a chain of stores through a sole proprietorship. This includes opening branches or setting up directly operated chain stores in the name of a subsidiary of the enterprise. A limited company can also open branches, subsidiaries, and directly operated chain stores. If you want to enter some internet platforms such as e-commerce platforms, you will find that there are many restrictions on individual businesses in China. Therefore, internet e-commerce platforms generally have many restrictions on individual businesses. For example, on China's online shopping platform Taobao Mall, individual business owners cannot open more professional Tmall stores on the platform. On China's online shopping platform JD.com, individual businesses are not allowed to open corporate flagship stores and can only open Jingxi Mall under J.com. These internet e-commerce platforms do not restrict any sole proprietorship or limited liability company, and anyone can directly enter. So when you want to join an e-commerce platform in China, it is recommended to register a sole proprietorship or a limited liability company and try to avoid registering an individual business. Right? From the above main content about scalability, we can know that limited liability companies have stronger scalability. Among sole proprietorships, the individual business owner has the weakest function. But why are there still many bosses willing to register as an individual business owner? Then, I will explain this issue to you by continuing to explain the third item, tax types and tax rates. To explain clearly the tax types and tax rates, we first need to understand through individual business owners. There are 2 main types of taxes for individual business owners, namely value-added tax and personal income tax. There are 3 major types of taxes for limited companies: value-added tax, corporate income tax, and personal income tax. A limited company needs to pay an additional corporate income tax than an individual business and the collection methods of these 3 taxes are also different. The default practice for individual businesses is called assessed collection. However, many areas in China no longer allow assessed collection. For example, Beijing can only implement audit collection. The default practice for limited companies is to implement audit collection. The key point of audit collection is the word audit, so we need an accountant to do the bookkeeping and tax filing services. The tax bureau will collect taxes based on the amount we record and report. This is called audit collection. As for the assessed collection of individual industrial and commercial households, the key point is the word assessed. In some areas, assessed collection is also called quota collection. This word means taxation according to a certain amount without keeping accounts and filing tax returns. Because assessed collection does not require an accountant to keep accounts and file tax returns, and the assessed tax rate is relatively favorable. Therefore, under the premise that the local government still allows the trial implementation of assessed collection, if you are a sole proprietor, do not want to increase shareholders, and do not consider joining an internet platform, then I would first suggest applying for individual business ownership. So the above is the course about which type of enterprise is more suitable for you to choose when registering a company in China. I will stop here for now. Thank you for listening.